Today, the market didn't just fall. It sent out a coded warning. Nifty slipped quietly on the surface. But underneath, something far more serious is building. And if traders ignore this shift, tomorrow could hit them harder than they expect. Welcome back to Wealth Maama, your daily breakdown of what really drives the markets. Today looked like a calm decline. But when we dig deeper, the market's behavior reveals pressure building across sectors. Let's decode exactly what happened and what tomorrow could unfold. Nifty opened at 25,867, made a brief attempt to stabilize, and then gradually slipped into a controlled downtrend. The index closed at 25,839, down 120 points, and the entire day was marked by a series of lower highs, a clear indication that sellers dominated every bounce. The day's low at 25,728 showed clear demand exhaustion, and even though the market attempted a mild intraday recovery, it failed to break above 25,923. Market breadth was notably weak today, with 33 declining stocks against only 17 rising, confirming broad-based pressure. Why Nifty moved like this? Global cues. Global markets provided no support today. US futures remained subdued as the expectation of early rate cuts weakened after fresh comments from the Federal Reserve. Asian markets traded mixed to negative, with China's economic slowdown once again weighing on metal and export-linked stocks. This set a negative tone for the Indian session from the start. Domestic factors. On the domestic front, FIIs continued their selling streak. Throughout December, foreign flows have remained negative, and today's intraday pattern clearly reflected distribution. Every uptick was sold into. Additionally, uncertainty around policy announcements and the upcoming budget is preventing institutions from taking aggressive long positions. Sector pressure. Major weakness came from IT, metals, chemicals, and FMCG. A sharp dip in Asian paints and sustained selling in large-cap IT names added significant downside weight. This widespread selling shows the market is shifting into a cautious, risk-off mindset. Sector-wise performance. Strong sectors. Strength was limited and came only from selective names. Titan, Adani Enterprises, Eternal, and Indigo showed resilience. These stocks attracted buying interest as investors preferred companies with strong fundamentals and stable business outlooks, even in a weak market. Weak sectors. Most sectors were under pressure. Metals, IT, pharma, FMCG, and even banks towards the second half. Metals fell due to weak China data, and IT experienced selling after global tech sentiment turned cautious. This wide-ranging decline shows that the market isn't just rotating, it is stepping back. Top gainers of the day. Eternal, plus 2.28%. Eternal saw strong buying interest backed by heavy volumes. After recent volatility, the stock stabilized and attracted confident accumulation. The demand pattern indicates bullish sentiment at lower levels. Titan, plus 1.94%. Titan gained as investors rotated into consumption-heavy, high-quality large caps. The stock demonstrated intraday strength despite market weakness, signaling strong institutional support. Adani Enterprises, plus 1.53%. Adani Enterprises recovered sharply after recent pullbacks. The stock displayed sustained buying pressure and outperformed the overall market. Indigo, plus 1.31%. Indigo showed a healthy rebound after yesterday's steep correction. Volumes indicated renewed interest from buyers testing short-term recovery zones. Shriram Finance, plus 1.17%. Shriram Finance bounced from key support levels and displayed strong accumulation. NBFC saw selective buying as yields stabilized. Top losers of the day. Asian Paint, minus 4.60%. Asian Paints was the day's biggest drag, falling sharply due to concerns over rising raw material costs and weakening demand outlook. The stock's breakdown added heavy pressure on FMCG sentiment. Tech Mahindra, minus 1.90%. Tech Mahindra corrected as global tech conditions softened. Investors trimmed exposure ahead of potential margin concerns for the upcoming quarter. HCL Tech, minus 1.82%. HCL Tech also declined in line with the weakness across IT names. Reduced optimism around global enterprise spending contributed to the pressure. Wipro, minus 1.53%. Wipro witnessed strong selling volume, reflecting hesitation among institutional buyers. The stock continues to struggle with muted growth expectations. Tata Steel, minus 1.52%. Tata Steel slipped after weak China economic data triggered fresh selling in metal counters. The sentiment across the entire sector remained negative throughout the day. India VIX. What it signaled today? VIX closed at 10.95, slightly lower than yesterday's spike but still above the normal comfort zone. As the VIX rose in the early session of today but at the end it cooled down. This indicates that although intraday volatility cooled off, underlying market uncertainty remains. A stable but elevated VIX often precedes sharp moves in either direction. Support and resistance levels for tomorrow. Nifty has now entered a zone where both the upside and downside are equally sensitive, and these levels will act like pressure points for tomorrow's price action. Support 1, 25,740. This is the first and most important support because today's intraday buyers stepped in around this region. If Nifty tests this level again, the market will reveal whether bulls still have the strength to defend it or whether sellers will overpower them. Support 2, 25,630. If support 1 breaks, Nifty may slip quickly toward 25,630. This level has strong historical relevance. It acted as a consolidation base earlier, so buyers may try to build positions here again. A break below this zone, however, opens the doors to deeper corrections. Resistance 1, 25,930. This level represents the intraday rejection zone from today. If Nifty climbs above this level, it will indicate that buyers are ready for a comeback, and short sellers may start covering their positions aggressively. Resistance 2, 26,030. This is a psychological barrier and also aligns with the previous supply zone. If Nifty breaks and sustains above 26,030, it can trigger a strong momentum reversal and bring back broader market confidence. Tomorrow's market is shaping up like a classic tension zone, not too bearish to collapse instantly, but not bullish enough to recover with strength. If Nifty breaks below 25,740, the market could slip quickly because sellers have been waiting to test lower levels. In this scenario, the correction may extend, and we could even see a retest of 25,630 with high intraday volatility. But if Nifty manages to reclaim 25,930, we could witness a sharp counter move. This would be driven not just by fresh buying but also short covering, which can accelerate the upside faster than expected. However, the structure still suggests that traders should avoid predicting direction blindly. Tomorrow is more of a reaction day, where the first breakout or breakdown will define the tone for the rest of the session. The safest and smartest approach will be to let the market show its hand in the first 15 to 20 minutes before taking any directional trade. That's it for today's Nifty analysis. If this breakdown helped you understand the market better, make sure to like, share, and subscribe to Wealth Maama. Tomorrow's moves are crucial, and we'll be here to guide you through every step. Stay disciplined, stay informed, and stay profitable.